Raunak Onkar then is with us, a research head at PPFAS MF, who's joining in to our studios. And Raunak, it's a fairly unpredictable time for the equity markets, but what exactly is the portfolio strategy at this juncture?
Strategy has been the same for a long time. We follow businesses where we understand the companies and the industries very well, trust the managements for running the businesses very well and treating the shareholders fairly. And at the same time, we also want companies which have a long tailwind in terms of the businesses they operate in. And if they are available at a reasonable price, they stay in the portfolio. If not, we can stay in cash, we can invest abroad. And that strategy has been playing out since the fund has started.
Okay, so the last time that we spoke to now, there's been a new addition that you've made, Amazon. Yeah. A small portion, but yes, a fresh investment. Although I would say, you've come in really late into the story, but what pushed you this time to finally go out and buy into Amazon?
So it's been a decade we have been tracking Amazon as a business, and we have seen it evolve dramatically and quite amazingly. But again, when you go back to the traditional metrics of business valuation, you always see Amazon to not show the accounting profits the way other companies do. And we realized that, okay, it's our misunderstanding that accounting profits may not be the only thing to understand. Maybe economic profits are something that we need to figure out. And in the midst of this, Amazon started the cloud computing business. It also started its internal Amazon advertising business. Yeah. Although the advertising business is not broken out in the top line numbers that they provide, but the cloud business is the profit driver for the company. Yes. And we have since then understood the cloud business a little bit better than we knew in the past. And that led us to believe that Amazon is no longer just a retail company, it's also a retail advertising and a cloud computing business.
So what would make you increase your stake in it as opposed to the 0.5% exposure that you currently have?
One thing is valuations, and secondly, as the numbers keep coming in, more data keeps coming in, it makes a conviction even stronger if the idea is worthy to be in the portfolio or not.
And you mentioned that when it comes to the consumption sector, you can look to nibble in at reasonable valuations. How are you looking at what is the current exposure and what the outlook is for the sector fundamentally?
Yeah. The only two consumption stocks in the portfolio are Zydus Wellness and Nestle Global, the parent company. And it's purely because of valuation and the businesses that they operate in. The frontline consumer stories are still very, very expensive, according to us. We'll wait. With the preferred businesses we want to own, but we don't want to pay a very high price for that. Yeah.
Okay. Again, the market has been range bound so far with, a continuous overhang of elections and now the recent geopolitical concerns that we've seen play out in the last 2 or 3 trading sessions. But would you say that A, it's been a show of resilience by the market, and B, how best do you deploy this uncertain time in the next 2 months before the elections? Is there something which is on your watch list or some stocks that you already own in your portfolio where you feel that if the valuation were to drop or prices were to come down, you would add more?
So, to be very fair, last year was a very difficult time for us because we already were studying a lot of businesses but had nothing to buy because the valuations just went out of hand. This year has been a little bit better, where some of our existing portfolio companies are looking attractive and we are adding to them. At the same time, newer companies which we were already on the grocery list that we wanted to buy.
What have you added to?
The existing companies, the Persistent Systems, some pharma companies and all the other stocks that we own, some banks. We've added wherever we could, the valuations were reasonable. And we kept on tracking the companies and they are no longer in the out of reach range. They might come in a valuation range which might be considerably attractive to us. But we'll restrict ourselves to 25 companies in the portfolio. So it's going to be an opportunity cost kind of a thing. Whether you sell something or buy something else or stick with the existing company and ride that idea.
What continues to give you conviction about Persistent though? Because the numbers have been a little volatile, the earnings performance.
So it's been quite stagnant actually, not volatile also. It's not growing at the same rate as the industry is growing, which is very clear. The only thing is they are in an industry where they're in a sector where the volume of work continues to increase year and year. And they are in a particular business area where they have an advantage compared to other companies. They don't have the legacy business to manage at the same scale as the larger IT companies or some of the mid-cap IT companies. So they are not system integrators, they are basically product developers, and they will basically outsource product development for any company who is willing to, any enterprise client who is willing to give them the opportunity. I think their problem is the sales engine has not been firing at the same pace as the rest of the industry. I think we'll have to wait and see. But I think we trust the management to deliver on that front. Let's see.
Thanks very much then, Raunak, for dropping by, giving us your portfolio additions as well.